I've been tinkering with the MACD strategy from Trading Rush again. You might remember from my last video that I showed how you could get a 22% return over a 3-week period trading this strategy. That's really good, in case that's not obvious. Hey guys, I'm David, and in this video I'm going to be taking the same strategy and plugging it into two different market conditions again. In my last video, I compared a strongly trending market with a ranging market. The strongly trending market was obviously more profitable across all the time frames. You see, it's a trend following strategy, and a strong trending market is good for it. I showed definitively how the 5-minute chart was significantly more profitable than the 1-hour chart. In the ranging market, across all the time frames, it felt like gambling, and I felt to actually get consistent results, I actually had to play with the settings and change things to actually make a profit. Well, which is, do you want to tinker with your strategy? In this video, I'm doing something similar. I'm comparing a strongly trending market with a slowly trending market. Both are over a 3-week period, and the results surprised me. I have some interesting conclusions I want to share with you at the end of the video. I also have a really interesting insight I'd like to share with you. Basically, a new trading signal. So stick around to the end of the video. Stick around to the end of the video. You won't regret it. Just quickly, the rules. If you want a detailed explanation, make sure you check out my previous video. It does have a more detailed explanation of the rules. Basically, for long trades, and these are all long trends that I'm entering, the MACD must cross below the zero line. Price must be above the 200 EMA. The stop loss is below the most recent fractal, and this take profit is 1.5% of the stop loss, 1.5 times the stop loss. The risk is 1%, so your target is 1.5%. So yeah, pretty simple, and moving on. So here we are on TradingView, and I picked the Euro Yen for this strategy again. This time I traded it from this day through to this day. As you can see, it is a slowly trending market. It is like a good spot to enter because price has come down, made a new low, high, new low, which is a higher low. So I entered on this bar here. And you can see the strategy as it progresses up to this spot. That's a 3-week period. In the previous video, I picked this range as this section as the strongly trending market. As you can see, price is going very strongly. So first, let's look at the results from the last video for the strongly trending market. Okay, here are the results from the trending market. As we can see, over the 3-week period, on the 1 hour, you only got a 1.5% profit. But as we go down the time frames, you can see that the 5-minute produces a 22% profit, which is outstanding. Notably, the 15-minute gave us 12 wins, 5 losses at a 13% profit. Those incredible results were from this strong uptrend. Now, let's take this slow uptrend. Basically, as you can see, it doesn't go up a whole lot, but it is an uptrend nonetheless. This is what happens when we dive down to the 15-minute time frame. We can see the price meanders. It does get signals, but if anything, it is more ranging. I only took long signals, but I do want to point out that there was one section where I ended up with a whole bunch of short trades, and they all lost. 4 losers in a row, taking signals in both directions, but I was only taking one signal, and I was taking only long, so that doesn't count. Yes, where there were profitable trades, there was also losses. 2 wins, 2 losses here. So here are the results. In this slowly trending market on the 1 hour, there was 4 wins and 1 loss, leading to a 5% profit. On the 30-minute, you got 6 wins, 3 losses for a 6% profit. But on the 15-minute chart, you got 5 wins, 9 losses for 1.5% loss. If, however, you had included the both directions, you would have had 4 additional losses on that, leading to a grand total of 13 losses and a minus 4.5% loss. So far, I am kind of noticing that the 30-minute time frame seems to be the golden one. You can increase it for slower trends and decrease it for faster trends. But unfortunately, that's always going to be with the benefit of hindsight. As you guys know, I like to tinker with things. So I picked this as a reasonable entry, but as you can see, it wasn't a strongly trending market. So I thought to myself, what about if I was to play something differently? So I picked a next good daily entry that you could potentially take a daily long trade off of, such as this one off this particular candle. And I traded it through to a point where you would potentially get out. Here's a doji bar. You would potentially get out here. And I thought I would see what would happen, what trades I would get on a 30-minute chart. So this is the outcome. From here through to here, this is where it previously finished on the 3-week period, 3-week test, but now I shortened it and went for the whole length on the 30-minute chart. And I got 5 wins and 0 losses. So what I'm trying to show you right now is that if you can find good entries on the daily chart, even if you're a day late, like a day late would have put you in here, a second day late would have put you in here, a third day late, you would have missed one trade. Basically, this strategy allows you to enter into daily time frame trades and not carry the risk of late entries if you were entering late on the daily. So that's quite neat. So I'm looking for daily entries to trade this strategy. And then I trade it until basically the daily entry is no longer there, or my target on the daily is reached. Then I get out. As we can see, it basically went sideways, and in this particular case, it falls away, and you probably would have taken a few losses through there. But this doji, it could have gone either way. It could have gone up or down. Just so happened to go down, so it was a good way to get out. Now for that insight that I promised at the beginning of the video. So what would happen if you took divergence entries on the MACD when price is below the 200 EMA in the direction of the trend? Well, here's one that I've marked. Your entry would be here. You would go straight into profit. Here's another one I've marked. Your entry would be there. You would go straight into profit. Now, this obviously only works well in a ranging market or in the direction of the trend. Here is a strong downtrend. If you tried to take divergences, your entry would be there. You would have lost. You would have lost. You would have possibly won, and you would have won. So it doesn't work so well going against the trend. But when there is a very slow trend and you're on a 15-minute time frame, it seems to be quite profitable, at least for 2 entries. Now, if we drop it to the 5-minute chart over the same period of time, once my computer renders, we have another profitable entry. No longer divergence. Price is not below. We have divergence here. That would have been a profitable entry as well. As you can see, it's working on the 5-minute time frame as well. This is something I've just noticed and bears some more research and a lot more looking into. It is potentially profitable, but yes, we'll find out. Thank you for watching my video. I hope you find the ideas I presented here profitable, and I hope it makes you money. If you do like my videos, I really appreciate it when people like and subscribe. I really notice. Basically, I picked this topic again because I got such great feedback. I got good comments, I got lots of views, and I got good likes. So if you want me to cover a specific topic, then please suggest it in the comments. I will have a look and I might even give it a go.